Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Thursday, April 1st, 2021. Definitely want to get a video out at this point in time. I fired off a post just to show you guys the levels that we're looking at today. Certainly some levels worth noting. Sometimes we'll do these videos and kind of in no man's land, bouncing around between support and resistance. But here we are once again at the top of that key trading range. Again, you can see lots of reactions, even back here, but most importantly, a lot of reactions. It's capped every single advance since going back to since we entered that range back here on February 23rd, or really actually back there on February 21st. So there it is. No guarantees which way we go, but I can guarantee you that's resistance, and I can guarantee a lot of people are watching that level. It's probably going to be traded around. In other words, you know, anything's possible. You can break out, whipsaw down. You could break 1, 2, 3 days, but you know, let's keep it simple. A break of that, a solid break, especially a close, a solid close. That means, what does that mean? Well, 324.65 is where I have that line. You know, if you go to each and every candle, I'm sure it's a few pennies more or less. So you'll know it when you see it. A solid breakout, you know, big green candle through there, and or a solid close below there, above there. I'm sorry, would be bullish, near-term bullish. But I'm going to get into something because we're not out of the woods yet. When I say the woods, this is the woods right here, and I'm going to go over the market-leading FAANG stocks and show you. You know, I'm going to box in what I'll call the woods. So, you know, that's it. The market's not out of the woods yet. Pop up above it would be, and of course, same story. Pop down below 310 would be bearish. You know, the MO. Modus operandi so far has been, you know, buy the bottom of the channel, sell the top of the channel, buy the bottom, sell the top. We had a 2-day period where we were 3-day period where we traded below there and snapped right back up in it, and it's been the same thing since. Go long at the bottom of the channel and close those longs or go short. Now, I keep saying this, and I've said it back here, I've said it back here. This channel won't last forever. It's going to break out sooner than later, and it's getting long in the tooth. So we could very well break out to the upside. It wouldn't surprise me. We have a lot of momentum right now. And more importantly, you know, we did have a decent correction. It was 12+% in the NASDAQ 100. And so, you know, they were able to, there was some profit taking, no doubt about that in those sectors. But other than that, especially with the S&P 500, the sellers just can't take the market down. Now, you know, it doesn't change anything on the technicals, the long-term outlook, the divergences, everything are still in place. The excessive bearishness, excessive bullishness up to this point, that obviously reset it somewhat. We did see a lift in some of those put-to-call ratios and things like that. But here we are. Let's keep it simple. There's the range, and let's look for either a rejection here. And if so, and as I said this morning, you can certainly make a case, as you were here, those 2 days pointed out here and here, a case to close out longs taken either the recent divergent low when some of the price targets were hit on the indexes and we had bullish or positive divergence on the 60-minute charts. Yesterday was that clear breakout that was pointed out in the morning. That was an unmistakable solid breakout in the NASDAQ 100 we'll get to. So a quick trader could book profits or tighten stops and hold out for a breakout. Because we break above, there's a lot of energy in this coiled spring, and we could see a pretty good move up in the markets, and we could still keep those divergences intact, and we would. Let me make that very clear. If you look here on the daily chart, those divergences will only be extended on any marginal new high in the NASDAQ 100, and that's the daily chart. And here's what they look like on the weekly chart. Still very, very much intact, and sometimes you get you know, a single peak in the indicators with divergence like this, you know, a lower high. Sometimes you continue to get that divergence for a little while, but it is there, needs to be respected, and that's that. All right, so let's not make it overly complicated. Those are levels to watch. And then the NASDAQ 100, that was it. The downtrend line that was taken out yesterday impulsively. Nice little bull flag action later in the day. I told you I'd be out yesterday most of the day, and I was. And then that completes the roughly the measured target. Here, let me show you what I'm talking about. Sometimes I tend to forget in the video, especially if you're watching on a phone. That's not going to be real easy to see these levels. But that's it right there. Impulsive move up. You know, the breakout was right here, but we continued on through there. That's a textbook bull flag consolidation pattern followed by a thrust up, and we are now, as pointed out in the post this morning, clearly in the resistance zone. This is the level I had in yesterday's video and on the charts recently in recent weeks. 13,342.50ish, we'll call it. That is about the top of the trading range. And again, that meshes with what I just showed you on QQQ. So it is resistance. It's a well-watched resistance. You can see it here on QQQ on the 60-minute chart. About, again, I'll call it about 325 or so. And that's where we're at. So it's that simple. You can either book profits if you took them on the breakout above the trend line, or tighten stops and let it ride. Where would you tighten stops? Well, let's say we get rejected here. One bullish scenario would be a backfill of yesterday's gap here on QQQ, backfill the gap, then go on to breakout. That would be very near-term bearish and give you a quick pullback trade, and there's a target to cover and reverse if you're an active trader. We could still break out, or we get rejected and we go on, and that's it. Because remember, we've been, let's not forget, rejected here every time. And if we get rejected again and we get back down to the bottom of the channel, and I know I've said it before recently, I thought we would break once we got there, but we continue to hold it. So and that's it. So as I like to say, support is support unless taken out. This is a daily chart, so intraday brief, little brief whipsaws, especially morning gaps down that get bought up, they don't count, at least not on the daily time frame. You want to see a solid break above or below. Okay, enough of that. Again, hate to beat a dead horse, but it's such a, to me, big level. And the more that we get reactions on there, the more eyes see it, the more traders are watching that level, and therefore the more significant it becomes. All right, small caps. Small caps went on yesterday to break out that level, and I mentioned in the morning about 22.22, and now are moving higher. Where they go, their fate will likely depend on what happens with QQQ here. So you do have some potential divergence. It's not confirmed because this indicator is still pointing higher. Could be taken out. In fact, the RSI is pretty much pushing the limits of the divergence. So it's kind of do or die time is what I see here. This breakout could prove to be a whipsaw, but it was a pretty good level on IWM or RTY, small cap futures. Lots of reactions. These are all 60-minute candles, or I'm using bars right here. They show a little better in the video when I go to candlesticks. You can see they're not as clean in the video, but numerous reactions there, and then boom, breakout, back tested, a little dip back below, and moving higher now. So that's near-term bullish. However, if it fails and we fall solidly back below 222, especially after already testing it once, that's going to be a whipsaw signal, aka bull trap, and then we may go on to hit, and I'm still open to this scenario. We'll see how we finish today based on what QQQ does, and of course I'm watching SPY as well, but really focus on QQQ right now and IWM. And that might bring us back to get that trend line tag. Remember, we reversed just shy of my uptrend line right here, and 205 price target that I had there, just a little shy of it. Can really reverse that previous reaction low. So that scenario, should QQQ fail here and RTY fall back below that breakout point that we broke out yesterday, we'll probably get that other thrust down there. So it's not a lot of meat on the bone if we're going to hit that and bounce. I have to say that now. So it's really more for the realm of the active trader, not the swing trader. Where's the swing trader? Again, the market's been pretty resilient. So for me to say, is it objective? It's not objective to short RTY or the small caps because we just took out resistance. We just broke out. You need to see that breakout fail. I just jumped down to a 60-minute chart here. It's about 221. That was the same. This is the comparable level that I was showing you on the futures yesterday in the video, and there it is. So you have lots of reactions along here. Gap there, gaps there. Lots of reactions on 221, and most importantly, a lot of recent reactions there, all these candles. So that's a breakout, and a breakout is a breakout until and unless it fails. So that's what I'm trying to say. It's not you'd just be taking a crapshoot shot at a short trade here. I can't make an objective case to do it. I could make an objective case on QQQ, like I said, because we're at resistance, but on IWM, you're going to need to see in my opinion, drop back down below there. Otherwise, a breakout is a breakout, and that's bullish until and unless it fails. I'm talking about, if I can circle it, this breakout from yesterday. And SPY, the S&P 500, I just really don't see a lot there. You know, again, the more well-defined levels are in QQQ. SPY holding above the 50-day, keeps pulling back and finding support at the 50-day exponential moving average. That's the, oh no, we dipped below it there, but here we hit it, took it out, but then closed right back on it the following day right there. Hit it again, and that's where we're at. So there's the S&P 500. Continues to have relative strength against the NASDAQ over the last few months, holding up much better, you know, with broad-based, more diversity. So again, it's been more of a tech correction, and let's talk on that, and then we'll move on, and I'll wrap the video up. I'll just want to update crude and natural gas and gold because I've been highlighting those, and I think there's trading ops there still. All right, so QQQ, the market leading stocks. Remember, these, I'm just going to go over the top 5 or 6 holdings or so, and that is where they go, the Qs go. And where the Qs go, that's where the market goes. So here's Apple, and Apple is still pinched between support and resistance. So when I said, you know, we're not out of the woods yet, these are the woods for Apple, if you will. And you have on Apple, you know, you have that 50-day. Lately, we've been capped between that big, to me, was a big level, was a target back then on the downside. Once we peaked at the high, 125.75, we hit it there. Then we broke below it, and we've been trading below it since. So there's the what Apple needs to do. If it takes out that 125.75 resistance, it's also going to take out the 50-day exponential moving average. That's the yellow line. And to me, a solid break above it would be bullish. Sometimes you get these whipsaws, so we'll just have to, you know, go as it happens. You know, you get the breakout, a solid close. Remember, back here we didn't have a very well defined. It's been more defined since then with additional reactions and failures at that level. So it's even bigger now than it was back here when it was first hit. Again, a more significant level because it's more defined. So that's what I'm looking at. And then, you know, on the flip side, a downside break below that recent trading range, and another failure here would be bearish. So there's Apple, the levels to watch. Microsoft trying to get out of the woods. Let's box in the woods right here, and that would be, you have a big old gap right here. They put in a divergent high right there, and that's been the top of the range right there at about 240.23, and it's right now it's slightly above that level again early in the day. You know, a little too early to verify that. You know, you want to validate that breakout with a solid close today, you know, well above the level, especially with some follow through tomorrow. So as of now, let's just say we're testing the top of the range. And again, so Microsoft trying to get out of the woods, but not out of the woods yet. There it is, downside break below 228 bearish, solid close up above 240 or so, 241 bullish. Amazon, same story. And again, these are your leaders. These are the Qs right here. You add up all these stocks, they're going to account for, you know, over half of the NASDAQ 100, just these top 5 or 6 I'm going over. So you really don't have to look at all 100 stocks because of the weighting in these guys. So there it is. There's the woods on Amazon, getting close to the top. And the bottom right there, I'd really want to see, you know, for the bearish case to firm up, a drop below 29.43 or so right there. Same levels I've been highlighting for weeks now, and that's it. We're just kind of going back and forth, back and forth. We have a bullish day. Then we have a bearish day. Bullish day, bearish day. It's like a fight between, you know, a good boxing match between two heavyweights. They're just slugging it out, you know, blow after blow, and, you know, kind of nobody's winning so far. So those are the levels I'm watching, and like I said, it's not going to happen forever. Although I will say this is one of the biggest trading ranges I've seen in a lot of these the bigger trading range, not the small one. This is the small one. So let's say this is the battle. Whoever wins this battle will then go on to we'll see who wins the war. This is the war. Break out above that, you know, top of the bigger trading range. Amazon or the bulls have won the war. Near term, you know, whoever wins this battle will go on to challenge in the top or the bottom of the range, and that's kind of the way I'm looking at it. Facebook right here, big old trading range also, and it's the same story in all these things. Now Facebook is popping above there. Now it's had a few pops above, false breakouts right there, and you can see what happens when it cannot sustain a breakout above that level, the trend has been you move back down to the bottom of the range. So, and then you go up to the top of the range, and that's been the MO for Facebook for months. You want to buy at the bottom of the range, which is 245-ish, and you want to sell around the top of the range. Sure, we could put another line here because we've had a few, there's our previous all-time highs right there, and that's what we're testing right now. So it's a big level, and that's why I'm doing this video. I think we're at a very critical point, do or die. Now, you know, the once again, the MO has been to go long at the bottom and short at the top, right? So far, it served you well. So a case can be made, and if you're making a case to short Facebook and Apple and all those others at the top of these trading ranges, especially the big one here on Facebook, then the case can be made to short QQQ or take profits on the longs if you went long recently or if you're still long. Or, let's say you don't short. I know a lot of people don't. Then tighten stops up and let it ride. See if you get the breakout. But then you don't want to see Facebook drop from where we're at now down to the bottom of the range. That's going to be a 19%, almost 20% drop. Possible, but very unlikely Facebook's going to drop 20% and not have the NASDAQ 100 go down with it. These stocks are highly correlated, and again, it's the weighting on there as well. There's the woods for Alphabet, still not out of the woods, and that's it. So pretty simple stuff. There's Tesla dancing on the 50-day exponential moving average. This yellow line here, if you can see it in the video. It's acted as support for months. We took out the 50 and we've been trading below the 50. And if you can see that, every attempt to get above it so far, that's where the sell programs kick in or the sellers step in. And then you also have some people don't look at moving averages, they look at price. And this is it, same story. Trading range. Okay, on to the other stuff like gold. Gold so far looking good off the bottom of my buy zone right here. Solid support level at 158. We bounced there. So far, pretty impulsive bounce. Actually, more impulsive so far. 2 days. Not much else to add. Again, we had the divergence. If we come down and have another jog down at it, same story. It's going to be an objective buy point. A little bit below, give it a little bit of room for that scenario I talked about, maybe a washout move, maybe we get it, maybe not, but not much more to say to that than, you step in, you buy support. And then also we did take out, this trend line's not super well defined, but there is somewhat of a trend line right here off these recent highs that gold's trying to pop, but you really need to see here. Let me turn off all the lines here, and here's what you need to see on gold now. These recent highs right here, you need to see those get taken out, and that should open the door for more upside. So that's gold. I continue to maintain, longer term investors can step in and buy here. I like that. With stops somewhat below for the next leg up in what I believe to be a bull market with a correction that's probably about finished running its course. And again, a case has been made based on the euro, US dollar, other things like that. All right, crude oil. Let's look at GC. That's the futures for gold. I'd be remiss not to point out we have a trend line right here. There it is, downtrend line. We can even go back here and draw that trend line a little farther off those highs, and so see a little more upside. Now we put in the divergent low, positive divergence here on the PPO recently on the 60-minute chart, and there's those recent highs. So that would be bullish if this breakout sticks, and then we take that out. That may be the last time we see the bottom of my buy zone. Remember, we only saw it once before. This is only it is the second test. We'll see if that's the last. And again, it's we take that out by a wide amount and very impulsive, selling below that. It's hard to spin as anything but bearish. But right now, it's bullish. The fact we had another successful test of support and a big support level again on the daily chart of GLD. So not just you don't see it as big here, but many reactions when I go back on that daily chart of GLD we were just on. Alrighty, oil, crude oil. Let's update that. That's interesting. Okay, so there it is. The S&P 500, at or near all-time highs, but yet crude has, been stair-stepping lower since, and that, sometimes can be a tell on the economy. There's your, downtrend right now. consolidating recently, hit my 57, that 57.25 target right there, T3. Did so with positive or bullish divergence, but so far that bullish divergence is not playing out for a very impulsive move up. It has moved up, and it made a double bottom there, so it really, that divergence was like that, extended. But it's been getting checked on this downtrend line right there. Keep it simple. There's also resistance there around 61. Now it runs up from about 61 to 62. Solid break above that. The downtrend line plus 61, and then again 60, more so 62 right now, would be bullish, and would it probably at minimum take us back to that 63.76 target. So there's your bullish case for crude. But if it can't get through this trend line, gets rejected, and I'm still leaning that way. I'm looking for a break of 57.25, and that would take us to my next target, potential target, that is, down here at about, if this chart loads, there we go. I have a support zone, the top of that, or the next target, 53.84ish right there. And then, all the way down to possibly 51.81 right there. And that is, again, defined by this trading range here from back in, looks like earlier in the year. Wanted to do natural gas for you as well. Kind of often tag along with crude, even though they don't always trade. You would think they probably have a higher correlation, but they don't. They kind of do their own thing, often march their own drumbeat, even though they tend to come out of the same wells very often. Natural gas continues to hold that trend line. That's what I mentioned recently. We put in a divergent low right there, positive divergence, been moving higher, hit that first target, 2616 right there, then took that out, hit my second target, 2675, had the expected reaction off there, pullback, the downtrend line, which provide an objective long entry, that was yesterday, and from there, up another, 3+%. So that's it. That's it. Buy pullbacks to support, stops not too below. If you're going for, you're swinging for the fences on this one, for that 292 target or possibly the next leg up, then you can give it a little room below this 526 support level. If you're an active trader, you want to keep stops tight, because natural gas is very volatile and you have a pretty good sized position. You want to, somewhat below the downtrend line, give it a little bit of room. Natural gas is volatile. You're going to sometimes intra-period pierce. You can see some of these candles below. Let me tighten that line up. Come right off the lows. There it is. So this is what I'm talking about. These are intra-period breaks. You can see it better on candlesticks. Those white parts, the shadows, that's normal, and that's why I prefer, if you're in front of the computer all day, manual stops. If you have a hard stop and you set it just below there, you're going to get stopped out on just the the volatility with natural gas. That's why you want to give it a little bit of room, especially a solid 60-minute candlestick close below the trend line there. Okay, and last but not least, just a quick update on lumber. I just wanted to kind of tie in a little fundamental rant here along with lumber. Lumber prices are set up, I think one of the, when we get a sell signal, probably be one of the the best trade ideas out there. This is LB. We're only on a 30-minute chart, 60-minute chart, hourly candles, 3 months. There's your minor trend line. It's getting pretty well defined now. So this is going to give you a sell signal on a break of the minor trend line with a minimum target of the uptrend line and or this 921.50. Probably shoot down to 921.50 right there, and just try to quantify it. That would be a drop of about about 9, right about 9% if and when we get there. So that's would be sell signal number one, and then of course a break of that level. So again, this is just a 60-minute chart. When we look at the daily chart, this is what lumber prices have done, and this is why I just honestly, I think Jay Powell's smoking crack, and he's just playing a dangerous game, being completely dismissive of inflation. Here's lumber prices. I use log scaling. If it turned off log scaling, you wouldn't even be able to make heads or tails of this chart. Lumber has gone from about and this is continuous length, continuous contracts of lumber. These are random length lumber futures. LB is the same chart I was just showing you. And we went here, lumber prices went from about $275 right there, the contracts, up to $1,000. Okay, so we're looking at, this goes back, gosh, we're back to 20. This is 2015. This is where we were. You can see this just extremely sharp. We went parabolic there. Here's a trend line to watch right there on lumber futures. So there's so much to fall. And now where I'm going with this, we just see, I saw something recently, the housing price index hit the highest, you know, the housing price gains hit the highest level since 2006. Well, that's when the market topped last time. It didn't start crumbling to 2007. I'm talking about the housing bubble that burst back in 2007 and took the market and the whole financial system down with it. And so there we are. Housing prices are at, you know, historic highs, insane gains, and yet lumber, which is one of the biggest inputs here, you know, is up to now $1,000 a contract. Let me see if I can give you the weekly chart here and show you what it looks like longer term. There it is. So here we're going back. There's the housing market bubble burst back in '06 and went down through '09. Here we are. So okay, that's one thing. That's fundamental. At what point are either these costs, these insane costs, going to get passed along to the home builder, or you know, the end user, the person having their home built, or will the home builders eat this? Somebody's going to eat this cost, and it's going to be passed along. And we're already seeing, you know, house prices go up. I can do the same thing with crude oil, wheat, corn, soybeans. So, like I said, to me, inflation is already run away here. And then you couple that with interest rates. So, at what point again is it going to put the brakes on the housing market when you know, lumber again, you know, has quadrupled in price over the last year or so here. And then of course you look at interest rates too. What's the other component of you know, buying a house for most people who aren't paying cash is your mortgage. And here's TYX. I talked about it for the last several weeks. It ran into this big resistance about 24. These are interest rates. So these are, TYX is the 30-year Treasury bond yield. So if you're looking at, you know, long-term mortgages and all that, the 30-year yield has quadrupled. It's gone up 200%, just like lumber prices, about over that same period of time. So what point is this going to, you know, put the hard brakes on, not the soft brakes, but the hard brakes on the housing market? So again, that's kind of fundamental rambling. Now, as far as trade ideas, I can sit here and, you know, talk to you about views on fundamentals all day long. Same story. We have a minor uptrend line on the 30-year bond yields. Remember, bonds move inversely to prices. So when the yields drop, and I still maintain this target, I have for the last several weeks. One, we hit it here, and that's where I first mentioned it. 2, 3, 4, 5, 6. 6 weeks we've stalled out there, where I expected us to stall out on long-term yields. We haven't moved down yet, but I think we will. And there's your target right there, the trend line minimum target, and then some, actually I'd put a line there around about 1750. PPO is starting to turn down at high levels, hasn't crossed over yet. And the trade, of course, you can't trade the yields directly, but you can trade the bonds. And there's TLT. This is a weekly chart. TLT has pulled back to that 134.42 support. It was a previous reaction lows there, very oversold. Again, everything I've covered recently. Last time we were oversold was right here. You can see that proved to be a good time to buy, and not on the initial tag of the oversold reading. Subsequently, we came in, started moving up, and the bottom came a few weeks later, just like I think it probably will here. Time before that was right here. We didn't go much lower, slightly lower, and it took a little while for that trade to, if again, assuming you just bought the oversold reading on a weekly oversold reading on TLT, gave it a little patience in time. You really didn't go underwater much, ever so slightly, just like right here. And that may be the case here. It may take a few more weeks, but again, you have treasuries at support, interest rates at resistance. And then when we look at the bond futures, what I like to trade, I'm really liking the 10-year. The 30-year, you get more bang for your buck, but this is ZN, the 10-year Treasury bond futures. Been highlighting it for weeks. Put in divergent low, and so we made a marginal new low, but it's still very much a divergent low right there. Just extend the lines out, and we're starting to move up. This would be your first target, 132.094. You know, taking profits a little just shy of that, unless you're holding out for some of these additional targets. And I could see a move all the way up here. So that's what treasuries look like. And again, so far this drop in Treasury prices has been a rise in yields. But as I showed you, we're at some pretty significant resistance levels there. So that's it. So you have levels to watch on the stock market as well as crude oil, natural gas, and then again, lumber, we're waiting for a sell signal there. And then once the trend changes, once we get some downside traction, and again, if you go back to the longer term chart that I covered, I think there'll be plenty of downside once we get in there. So if you don't want to jump the gun and take the early sell signal on that 60-minute futures chart I talked about, there's no problem with that. You know, there's an old saying, second mouse gets the cheese. Although, you know, if you get in early, first mouse, you know, meaning a break of this trend line there, there's a pretty good drop to that first target there. And I think lumber is a very crowded trade. So we'll watch this one. Again, it's on my radar. This is a trade setup, not an actionable trade at this point in time. And I'll give you guys an update if and when I see that trend line crack. This has been Randy Finney with Right Side of the Chart. Have a great day.